Have you ever looked at a company's financial report and thought, wait, what does this actually mean? You're not alone, especially when it comes to consolidated financial statement. They are packed with important insight but can be confusing at the first glance. Hi, I'm Ayesha Salma Fabrizio, and this is a short video, and this is a presentation was prepared under the guidance of Ma'am Dr. Triani Arofah, M.Si, AK, CA, and CRA. So we are going to make a sense of consolidated financial statements together. We'll be using of PT Japfa Comfeed Indonesia Tbk as a real world case study, and I promise no wavy jargon, just clear explanation, no matter for you as a retail investor. So we are together new to investing or just want to sharpen your analysis. You are in the right place. Let's dive in. By the way, you can also visit Japfa Comfeed's official website through the links provided to explore their full financial report. Right, let me ask you a question. Do you trust what you see in a company's financial report? What if I told you the number of in a parent company's report don't always tell the full story? That's where consolidated financial statements come in. They give you a big picture, the performance and position of the entire business group, not just the holding companies. But here is the challenge. This report can be intimidating. Terms like elimination, non-controlling interest, and intercompany transaction can be easily make your eyes glaze over. That's why this presentation going to break down this real using data from PTJAPFA Comfeed Tbk, a large agri-food company with a complex group structure. By the end, you'll have a much better grasp of what these reports mean and why they matter for your investment decision. Okay, let's get to the heart of it. What exactly are consolidated financial statements? Think of them like this. If a business group is a tree, the consolidated report showed that the whole tree, not just the trunk but all the branches too. It combines and the result of the parent company and all its subsidiaries into one single report, as if they were in one company. Why does this matter? Because without it, we would risk double counting, like recording a sale and a purchase between the two companies in the same group. That could seriously distort the real numbers. For a retail investor, this statement helps you understand the true profitability, risk, and financial health of a business group. Here is a great example of PTJAPFA Comfeed Indonesia Consolidated its feed, poultry, and processing unit all into one report. So when you read it, you seeing it, the full of picture, not just one part of the operation. Let's kick things off with some essential concepts with PSAK 65. These are the backbone of consolidated financial statement. First up, control. It's not just about owning shares, it's about power. If a parent company can influence decision and affect returns, then control exists and the entity should be consolidated. Now, ever heard about NCA? That's a non-controlling interest, the slice of the pie that belongs to other shareholders. If your company owns less than 100% of a subsidiary, so NCI helps us to figure out what part of the profit or loss does belong to the parent. Then we have elimination, right? Sounds intense, right? But it just means removing transaction between entities in the same group, so we don't count them twice. No double dipping in the finance. And lastly, about cost-effective solution, transparency is key here. Financial report need to clearly show who owns what, so investors get the full picture of a company's health. Stick me with, because we'll see how this plays out in a real company next. Now let's dive into our case study, PT Japfa Comfeed Indonesia Tbk, one of the powerhouses in Indonesia agri-food sector. They are not just big, they are vertically integrated. That means they control every part of supply chain, from breeding and farming to processing and distribution. It's like the farm to fork model, but at industrial scale. Their core focus: animal feed, poultry, aquaculture, and processed food. So, if you've ever enjoyed chicken or fish in Indonesia, chances are JAPFA had something to do with it. And here's the kicker: they have been publicly listed since 1990. That gives investor access to their financial and makes them a key player of Indonesia's stock exchange. Existing, right? Let's see how they are structured behind the scenes. Here is where it gets interesting: JAPFA's group structure and subsidiaries. They operate under a holding companies model, meaning that the parent company owns several subsidiaries. This gives them flexibility to focus on different parts of a business, from chicken processing with PT Siomas Adisatwa to beef with PT Santosa Agri Indo. But that's not all. They are going to global. JAPFA has operation in Vietnam, Myanmar, India, and China. Each market has unique challenge, so having a flexible structure is a key. Now, you might wonder, does the parent company owns 100% of the subsidiaries? Not always. Ownership percentage and control levels vary, depending on the region, strategy, and partnership. So remember those PSAK 65 concept from earlier: control and CI elimination. They all come into play right here. This structure is a real-world example of how theory meets practice. Correct? Alright, now let's talk numbers, but in a way that makes sense. PT Japfa Comfeed applies PSAK 65 into consolidated its financial. What does that mean? Think of it like blending all the ingredients in a smoothie. You get one consistent taste, a true picture of the company's performance as a whole. They follow unified financial reporting, which means all subsidiaries, no matter how big or small, are included in one single financial report that gives investors a clear and full view of JAPFA's financial standing. Now, here's something like really smart. PT JAPFA eliminates intercompany transaction. For example, if PT JAPFA unit sell feed to another unit farm, that transaction get removed in the consolidated report. Why? To avoid double counting. Imagine counting the same dollar twice. That would be misleading. By applying this method, PT Japfa ensure accuracy, transparency, trust in its reporting, and that's what keeps investor confident. Stick around. Next, we'll uncover how ownership works, especially when JAPFA does own everything. Here's where things get a little spicy. Let's talk about non-controlling interest or NCA. JAPFA operates globally, and guess what? They don't own every single piece of every single subsidiary, especially in international operation. NCA plays a big role. This means that some profit and asset belong to other investors, not just JAPFA. So, where do you see this financials? It's right there in equity section of the consolidated report. It shows exactly how much belong to JAPFA and how much doesn't. And here's the key point of investor NCI effect profits. If NCI is high, Japfa's share of profit goes down. That directly impact valuation, dividend, and financial health. Understanding NCI help you to see a real picture. It's knowing how many slices of pizza are actually yours, super important of you're hungry for returns. Up next, let's look at how Japfa stay compliant and keeps everything transparent. Last but definitely not least, let's talk about disclosure and compliance, because transparency is everything in the world of finance. Japfa's annual reports are like open books. They detail everything from who owns what to how profits are shared to change in NCI. This helps investors to keep track on control and performance. They all clearly explain the consolidation method they use, like how they eliminated intercompany transaction, account for NCI under PSAK, no smoke and mirror here, and of course they don't just follow the rules, they excel at it. Japfa complies with PASK and OJK regulation, ensuring every report meets professional standard and earns investor trust. So to wrap it up, Japfa isn't just a leader food production, they are also leader in financial transparency. Now that we've explored the key concept and case study, let's wrap it up with some actionable recommendation, especially useful for investor, analysts, and decision makers. First, don't just stare at total net income. Always focus on the owner profit, what portion of that income actually belongs to Japfa shareholders. That's the real indicator of value. Second, you've got to understand the group structure, which subsidiaries are driving the real revenue. How much control does Japfa have over them? Knowing this helps you evaluate a company's actual strength. Third, keep an eye on NCA trends. Change in NCA percentage might signal a strategy move, a control shift, or profit redistribution among business unit. A subtle change could say a lot. And finally, always use consolidated data wisely. These financials are gold mines if used properly, especially for making smarter investment decisions, risk assessment, and even benchmarking. So don't just read the number, interpret them, and there is a story behind every line item. Alright, let's bring everything together with solid conclusion. Consolidated financials aren't just accounting formalities, they're essential for understanding the real health of companies like Japfa. Without consolidation, the report might mislead you. They only show a part of the story. PASK 65 give us clear roadmap. It emphasizes control over ownership, which makes financial report more consistent and accurate. Now, Japfa is a great example with its many subsidiaries and global reach. Transparency like things NCI and intercompany elimination is the key. You get see who really benefits from a profit. And here is the golden takeaway for a retail investor. Understanding this concept unlocks a whole new level of insight. You'll understand income distribution, risk area, and hidden relationship that typically investors might miss. This knowledge does not just help you to follow the story, it helps you to invest smarter and saver. And finally, thank you so much for your attention. We hope this case gave you fresh insight into Japfa Comfeed Indonesia Tbk, PSAK 65, and the power of consolidated financial. Remember, understanding this concept gives you a serious edge in interpreting financial report and making well-informed decisions. If you have questions or thoughts, we'd love to hear from you. Until next time, stay curious, stay analytical, and keep investing smart. And see you!